Right now, I want to bring back in Charles Moon. He's a senior market strategist of equities at Prosper Trading Academy. We were just talking the pros and cons of being long a till rate position right now. Hey, while we got you, the crypto stuff is like back, dude. What's going on?
All of a sudden, crypto became technical. Like when I tracked the futures contract, it rallied into the 200-day moving average on the daily chart and rejected. And before that, it actually had a double bottom at that 52-week low. And so it's like all of a sudden, crypto's becoming technical. And so that brings in the advent of more algorithmic trading per se.
Okay. People feel like they can make sense of it now?
I just think that it's just people are more comfortable with it being as a trading asset.
Okay.
And they're just, you know, it's kind of how people look at cannabis and tech. It's just a trading asset. They don't need to believe in the product, they just need to believe in the opportunity.
Yeah, the speculative nature of it, basically. JB, on terms of the market structure and the some of the stuff happening in the background, we're in, what are we in now? April? What's the deal? Are we getting these big exchanges launched and stuff? Is this going to be because they kept putting these things back?
Yeah, you've seen a couple of the smaller ones have come through. Obviously, Backed, that is the one that's backed by ICE and so forth, has had some regulatory hurdles that haven't been able to get over. But you are starting to see some of the smaller ones which give you access, and whether those are aggregators that are coming together, giving access to more. I think the big question ends up being is I think to Charlie's point is, you're seeing the acceptance of this asset class, and also more importantly, there's now more data points out there. So as you start to see it flow in, now you're starting to get ideas. And even, whether you believed or disagreed with the 20,000 down to 3,000 move, look at the different times where you had sort of sideways consolidation, acceptance back and forth, to use a lovely term from Ben Lichtenstein. But look where it happened, it would start to hit those technical lines. And now what you're starting to see is people say, well, maybe there's a value here, and you're starting to see a balance. Like, I think that's really interesting. Can you get above and hold that 5,200 level right now? Big question. I'm not sure there's an answer to it right now, but we keep kind of fluctuating now for the last couple of days. Can we punch through that, or is that going to end up being a ceiling for it, like it's been sort of the last two tries this past week?
Yeah, I think from a trader's perspective, it's somewhat difficult to try to trade. And the reason I say that is because look at the moves it's made. If you look at the chart, it moves, like you said, at a 6,000 level, stays there for 3 months, and then drops to 3,000, and then stays there for 3 months and drops to whatever it is. Now we were like 3,500 and just moving back and forth for several months, and boom, now all of a sudden it's 5,000. Now it's just going to stay there for a while if it repeats past behavior, and then it makes its next 1,000-point move. So it's difficult to trade in terms of a long-term play, because it makes a move and holds, and then makes a move and holds. So if you're in that type of position, I think it's very incumbent upon a trader to make sure you have defined risk within whatever you're doing, because it's very difficult to say what causes these moves. I mean, do we still know why it moved 1,000 points in 2 days last week?
Rumor was somebody made a big order. They bought a lot of Bitcoin. Someone bought a bunch of Bitcoin.
So one person can come in and move it 1,200 points.
Right.
So again, you just be careful as a trader. Nothing wrong with taking direction, but I would say approach it from a defined risk standpoint.
Yeah. The consolidation of futures now obviously is going to happen, at least for the time being. Who knows? Maybe the volume will put SIBO's future contract back in the market. Who knows?
Sure.
But Charlie, let's keep it going on some other stuff though, because I know that you look at some of the gaming, some of the China stocks and more. Wynn Resorts, another top winner today. Okay, the thing is really starting to move now, and it's fulfilling kind of this story that we've been telling, that it seemed like the market was sussing out maybe the bottoming of the bearish economic story at the end of last year. Like right as our stocks were tanking, Wynn and China and Tencent, all that stuff was flattening out.
Yeah, and a lot. So it's funny. Wynn came on my radar recently just because I have a watch list I go through, and this is one of the names I just tend to.
I think we talked about it last time.
Yeah, and all of a sudden, I saw Wynn, and I pulled it up on an hourly chart, and I just could not believe the move that they had made. And I know that some of that had ties to the news coming out of Massachusetts, and I'm opening the casino there.
Right. Macau had an okay print.
Right.
Slower, but slow, but not
that was
terrible.
the big thing. Really, that was the big thing. It's not being decimated as it was before.
Yes.
And there's thoughts and belief that the quintessential economy is going to recover, which helps the tourism, which helps people gamble more. And then in turn, of course, that's going to be big for Wynn. It's going to be big for LVS. But this is also a name that's, you know, like you said, it's been heavily depressed. It's been bottoming out. There's a lot of love from investors in this name because of previous gains that they've had. I know a lot of my clients.
Right,
are in
2017, big year.
Yeah, and so people are just trying to jump on in, and they're finally getting this reward. And now that it's starting to make this move, you know, it just seems like at this point in 2019, people are looking for the value play. People, you know, NVIDIA was a late mover, but now that it's moving, it's starting to really break out. Apple was one of those names. Facebook. It wasn't performing like how Twilio was or even Roku was earlier this year.
Right.
These were the late bloomers, but if you look at them, if you look at NVIDIA and Win and Apple, there's some of the strongest charts that you could look over the last 2 weeks.
No doubt.
In terms of stock market performance. They're just really, like a case in point today with Apple, markets were down. Markets were down big. The Dow was down big, and Apple was just chugging along. I think they even touched up on 200 at one point today.
Yeah, 1.6%. They closed at 210. There's, by the way, to your point, NVIDIA. Now, relative to some of the other semiconductors that are making highs, it's a little bit of a laggard, but to your point, it's picking up steam. Apple now at $200 is like coming out of a rocket ship. Have we ever seen a V-shaped, you know, move like this in Apple? I know they've had, you know, down moments throughout this, you know, bull market, namely 2015 to 16 and a half. That was kind of similar in terms of what the market was suspecting about China. But this company is now jamming to the forefront at a precarious time, I think, where they're trying to sell the world basically on their new services agenda.
Yeah, I mean, I think it's interesting. You look at what Apple's been trying to put together. They were penalized for their low growth in China. Everybody came back to it. Then they started to pivot over into new services areas. And when they're pivoting into the new service areas, what happened was, well, is this the right idea? And now all of a sudden it was like, well, yeah, I think it is. I think it is something we should be doing. It's sort of.
Are you doing it? Here's the process. Is Apple doing it? Yes. Then is it the right idea? Yes.
Yeah, it's kind of an interesting scene. So I do think it's interesting kind of watch them pivot through there. And Apple's a perfect example of those companies where I think this exposure to China had a big downward impact, especially on some of those Chinese stocks we were talking about before. But now all of a sudden you're starting to say, okay, hold on a second, maybe the economy is better, so that exposure now is an upside opportunity for them, and it's watching it go through. The question for me on Apple is going to be, do they actually start to move forward with some of these services? Does this does their content start to actually come to light? Do people start to see stuff coming through? At some point, the potential has to become with actually some execution, and I think that's the question that's coming on with Apple.
Yeah.
I think that's what stock's saying going forward, that we believe not just only in what you talked about, but even iPhone sales, which was basically one of the main reasons the stock came down in the first place. But with China starting to get back on its feet and some of the numbers we saw out of China and the stimulus that's going on there, maybe they're thinking that maybe people are back to buying phones as well. So you add those three things together, maybe it paints a little bit bigger picture, or better picture, I'm sorry, for Apple going forward.
Yeah, I mean, I think that's fair, right, to tie it into what's going on there. You know, some of the other stuff I wanted to get your thoughts on, Charlie, when we look at companies that are now, you know, getting involved in all these buyout rumors. There's a bunch of companies that were either slammed for fundamental or whatever reasons. Sony's the latest that, you know, had a really rough 12 months. Now there's rumors that there's a potential, you know, a big investment or activist stake, again, by Dan Loeb. But I mean, I can look to a bunch of different companies. Nielsen's another one, the ratings company that got slammed over 2 years, but yet there's like a, you know, takeover premium in there. What do you think about trading those types of companies? I don't know if you look at those in specific, but there's a bunch out there right now.
Right.
GameStop's another one.
Right, and you hear about it. It's always the rumors, the activist positions, those are always going to be filtered throughout the markets. This is surprising with Sony that Dan Loeb is going after it again. It didn't work out so well for him the first time. And he's supposedly taken on, I think he had a 7% position last time, which is huge. And I think he wants to get in with somewhere to that same number. The difference I think that people are not recognizing with Sony is that the corporate structure is very Japanese based, not US based. Right. And so it's very difficult to infiltrate that kind of structure. It's not so much that it's secretive, but you know, it's very lock and tight. And you know, what really Dan Loeb's trying to position themselves is to get on the board, to make some true changes, to spin off some companies or just get rid of them completely, and to, you know, quote unquote, make the company profitable again. But that's the thing. He has to be able to sway the mind, the bigwigs of Sony. And I'm telling you, that's going to be his most difficult task out of any activist position that he decides to take on. He already tried it and he failed miserably. Not, you know, It's no knock on him.
Right.
I
It's
mean,
just
obviously
the
he
nature
got
of-
in, and it was like 12, 14, 15% pullback pretty quickly. And so today's response was very strong. I just don't know how sustainable. And regardless, even if it is sustainable, the question is he going to actually make a difference?
Right. Another one, by the way, that's getting rumored right now is Bed Bath & Beyond. See that there's going to be an activist stake there. But my point that I bring all this up is you've got IPOs, M&A, activism. There is like a stage that it feels like is setting up here this year where there's big changes being made at companies. I mean, like drastic types of efforts to turn ships around.
Sure, and I think when you look at these activist participation, like we're just talking about in Sony, you have to ask yourself, do you agree with the premise that they're taking to take this whole project on? Because like you said, he's already failed once in Japan. He's going to try to do it again. It's going to be difficult. I mean, I don't think that landscape has changed, but I think he's approaching it a different way, saying that Sony is in a particularly good spot because they own the studios, right? And he's looking at that as saying, that's almost like an arbitrage opportunity. I can come into this company, we can spin off this Sony studios, because who's looking for studios? Netflix, Amazon, potentially Apple, who just announced that they're interested in that same studio.
So content play, basically.
Yeah, you have to, and so if that's his play, do you agree with that? And would you participate in that kind of activity? So,
JB?
I mean, I think it's interesting. That's exactly it. This is not on the rumor of making Sony profitable in my mind. This is about the opportunity to sell off a significant arm of it to the fast-moving tech side that's out there. And the question is, can they actually get that through? To me, that's going to be an interesting one in itself, because the question to be is, how much do these companies want to take on? Does Netflix want to really take on that much more debt? And then what happens to them as a company if they have that big of a number, which we're already a little bit worried about? Same thing, Amazon's a little bit different, but I do think it's interesting to see that big move there was an activist idea, but to Scott's point, in one area that then can be easily chopped off in theory and spun into the high-flying area, which we're all talking about, which is content distribution.
Yeah. Hey, last thing here, later on this week, I feel like you're a content guy, Charlie. You consume a lot of content like me. I know we talk about video games. Disney Plus, they're going to release, the streaming competitor. We're going to see some volatility around Netflix finally. Does it depend on how good it is?
So I don't know. Like for me, it's like
they're going to give details rather. They're not going to actually.
Yeah, like with Netflix, it's kind of already priced in. We saw them barely move on the Apple News, right? So it's like Netflix has this.
It's all a validation.
Yeah, Netflix has this ecosphere where they're not worried, and it looks like investors are not worried because they create their own original content, and it's award-winning, right? It's like widely watched. Outside of like Game of Thrones, they draw some of the largest audiences that are out there. So I don't think Netflix and their investors are that concerned. If anything, that weakness was priced into the stock when Disney made this first announcement way back. So.
All right, there we go. Charlie Moon, always good stuff. Really good insight. We hit a lot of topics today. Appreciate it, Charlie. Really nice job.
Thank you for having me.
Charles Moon is a senior market strategist of equities at Prosper Trading Academy. JB McKenzie, there we go. Scott Conn over there. JB McKenzie right here. Scott is the host of Virtual Trade. JB is the one to my right, managing director of futures and forex. We'll be right back.